We've touched high level on some of the administrative requirements contained within the Uniform Guidance. So now it's time to take a closer look at some of those requirements. Administrative requirements are included in Section 100 through 345 of the Uniform Guidance. Obviously, there are a lot that we haven't discussed, and we won't be able to discuss them all today. However, there are a few more sections that we will discuss because of the impact that it has on TRIO. Procurement is the first section we'll talk about. Procurement is the act of obtaining or buying goods and services. Depending on the size of an organization, procurement can be the responsibility of one individual or an entire department. The rules pertaining to the purchasing function are the same for all organizations, no matter the size. A recurring theme, as promised, is the concept of internal controls. For all organizations, Uniform Guidance requires written policies pertaining to conflicts of interest and methods of procurement. These written policies are the foundation to establish practices that comply with Uniform Guidance. An organization's and auditor's best friend to prove compliance with Uniform Guidance is documentation. Documenting decisions and conclusions reached during the evaluation of compliance for any UG requirement should be part of the normal routine. Documentation, documentation, documentation. Part of the procurement standards relate to written standards of conduct covering conflict of interest. If your organization has a parent, affiliate, or subsidiary organization that is not a state government, local government, or Indian tribe, you must maintain written standards of conduct covering organizational conflicts of interest. Organizational conflicts of interest means that because of relationships with a parent company, affiliate, or subsidiary organization, the non-federal entity is unable or appears to be unable to be impartial in conducting a procurement action involving the related organization. There's another section, Section 200, 112 of the Uniform Guidance that also speaks to conflict of interest. But don't get those two requirements confused. Paragraph 112 indicates that a non-federal entity must disclose in writing any potential conflict of interest to federal awarding agencies or pass-through entities in accordance with applicable federal awarding policies. And of course, the other written standard of conduct covering conflict of interest is related to employee conflict of interest. This should be a no-brainer. Employees should not have conflicts of interest, actual or in appearance, related to procurement or federally funded dollars that are being spent. Another part of the procurement policy requirement is related to written procedures for procurement transactions. Written procedures requirements have always existed. However, Uniform Guidance is further emphasizing documenting the procurement solicitation process from start to finish to ultimately award to responsible contractors that have the ability to perform successfully under the contract. This goes back to the concept of reducing fraud, waste, and abuse related to federal dollars being spent. It is important for those managing the grant on a day-to-day basis to be aware of the procurement policies in place at your organization to make sure you're complying with them as grant expenditures are being made. Often, TRIO program grant administrators might not be responsible for actually writing the procedures and policies in place, but you are responsible for complying with those policies that your organization has maintained. These methods of procurement are required to be outlined in the procurement policies or procedures that an organization has. Micro purchases eliminate the need to solicit competitive quotations if the entity considers the price to be reasonable. These are purchases under $3,000 or $3,500 in a recent update and is the first level of procurement purchases made. The next level are small purchase procedures. Entities must maintain price or rate quotations from an adequate number of qualified sources. Application to procurements that are less than the simplified acquisition threshold, which is currently $150,000. Third are sealed bids. This is the preferred method for procuring construction-related expenditures and contracts. Next on the list are competitive proposals. This method is used for qualification-based procurement of architectural or engineering professional services, whereby competitors' qualifications are evaluated and most qualified is selected, subject to negotiation of a fair and reasonable price. Lastly are non-competitive proposals. This is the solicitation of a proposal from only one source, and it may only be used when one or more of the following apply. Either the item is available only from a single source, and/or it's a public necessity or emergency for the requirement to purchase that will not permit a delay resulting from competitive solicitation, which is often a lengthy process. The federal awarding agency or pass-through entity expressly authorizes this method in response to a written request from the entity, or after solicitation of a number of sources, competition is determined to be inadequate. For non-competitive proposals specifically, documentation is key to make sure that conclusions and decisions made are well documented and supported and include a conclusion that is one of these 4 items that was listed. The COFAR, Council on Financial Assistance Reform, created the Procurement Clause. This is just a pictorial representation of the different thresholds that we just went through. Certifications are required to assure that expenditures are proper and in accordance with the terms and conditions of the federal award. There are certain reports and payment requests that require certification. These include annual and final fiscal reports, vouchers requesting payment, and cost allocation plans or indirect cost rate proposals. Certifications that are required for vouchers requesting payment, for example, would include the drawdown requests made from the Department of Education for reimbursement of program expenses. Although this is something that the accounting department is most likely doing, it doesn't negate the due diligence that program directors or grant administrators have in ensuring that the costs that are being charged to the grant are allowable, approved, and supported by documentation retained. The language that is required specifically by Uniform Guidance, Section 415, is listed here. This language should be included in all of the reports or proposals listed on the previous slide. This is a summary of the different certification requirements, who they need to be certified by, and additional comments for future reference. Please take a moment to review. Reporting is another administrative requirement that specifically impacts TRIO programs. There are 2 types of reporting requirements that TRIO programs have to comply with. One is financial reporting, and the second is annual performance reports that are required to be submitted for all TRIO programs. Financial reporting goes hand in hand with the cash drawdown requests that are made from the Department of Education and are fairly straightforward. The annual performance report, or the APR, includes reporting key performance metrics on items related to the participants being served. All of the related requirements are outlined within grant material. Matching is also known as cost sharing. This includes requirements to provide contributions of a specified amount or percentage to match federal awards. Matching may be in the form of allowable costs, incurred, or in-kind contributions. Specifically for TRIO, the Student Support Services program is the only program that has this matching requirement. An institution that operates student support services and uses any portion of its SSS program grant for grant aid to students must furnish 33% of the total funds it uses for that purpose in cash from non-federal sources. Earmarking is applicable to all TRIO programs. This is a requirement that specifies the minimum or maximum amount or percentage of programs funding that may be used for specified activities. Earmarking may also be specified in relation to the types of participants covered. For example, the Talent Search Program under TRIO has these requirements. For each year of the project period, a grantee must serve at least the number of participants that the Secretary identifies in the Federal Register notice inviting applications for a competition. Additionally, at least 2/3 of the individuals served by a talent search project must be low-income individuals who are potential first-generation college students. As another example, upward bound programs must have an earmarking requirement as well. Not less than 2/3 of the project's participants must be low-income individuals who are potential first-generation college students. The remaining participants must be either low-income individuals or potential first-generation college students or individuals who have a high risk of academic failure. All of these earmarking requirements are also reported within the data of the APRs that are filed annually. This concludes Module 3.